Hi everyone, this is our third video on investor sentiment, and again we do this survey twice per year, and the overall trend is holding stable at a macro level on par with the peak of the last cycle. This signals steady momentum and active investor activity, and this week I will focus on office and industrial properties. So focusing in on office investments, the sentiment has remained stable for about 3 years. It reflects the slow but steady momentum generated by office properties. Sentiment has been relatively balanced, about 22% plan to buy, 50% plan to hold, and 28% plan to sell. And the survey is indicating that the pace of overall value growth is slowing down, and they're expecting values to increase by just 0.8%. I think that's a little bit low. Overall, office trends remain positive. Vacancy rates continue to tighten. They're expected to reach about 13.3% this year, down maybe 10-20 basis points on a year-over-year basis, with rent growth in the 2.5% range. Now, although it's not well publicized, asking rents nationally are now 12% higher than the pre-recession peak. So even though the momentum has been slow but steady, it's accumulated into some pretty substantial gains over the years. Assuming cap rates remain stable, this implies that growth in values should be in the 2 to 3% range for 2019. Transaction activity looks like it hit a new peak in 2018, up 18% from the 2007 peak. So we're still seeing really good activity levels overall. Now, looking at industrial, sentiment for this sector is the strongest of all commercial property types. 50% of investors surveyed plan to buy industrial assets this year, 33% plan to hold, 17% plan to sell. So they're still undercutting the value increases with a forecast of just 1.2%, which is significantly lower than performance would dictate. Although construction's rising, we're still expecting vacancies to come down a little bit, maybe 20 basis points to the mid 4% range this year, and rents are expected to rise about 4%. This implies a 4 to 5% appreciation rate if cap rates remain flat. Now, sales are strong. Potentially a new record set in 2018, up about 15% from the 2007 peak. Cap rates still have downward pressure. Significant buy-side demand and liquidity are both positives. Secondary markets have the most buy-side pressure currently compared to primary and tertiary markets, which are relatively stable. So as we wrap up, I want to highlight investor sentiment offers a unique insight into investor expectations. And this is a real opportunity to understand where the market's going. We're going to be releasing a new report in partnership with NREI in the coming month, and it's an excellent opportunity to get further insight into what's happening with investor sentiment.